We can't just keep, putting more and more people into smaller and smaller living situations and expect that to be fine. It's just not how it's going to work. Because also the rents go up, the property values go up, taxes go up, rents go up again to cover the increased taxes. Eventually it's got to break somewhere. What's going on, guys? Welcome to this episode of the Collecting Keys Real Estate Investing Podcast. And we are here in August already, which I cannot believe how quick this year is going.
Got our annual HOA meeting tonight.
Oh, yes. Yeah. Absolutely. That was top of the calendar for me.
Yeah.
Was the annual HOA meeting. It's kind of weird.
Gwen, the HOA president, is going to be upset you're not there.
Oh, that HOA meeting. Oh, shit. We can talk about that during the show.
What HOA did you think it was?
I thought I meant like for your house.
No.
Right on, guys. If this is your first time here, my name is Mike DeHaan, and I'm here with my co-host Dan Austin. And this is the Wednesday Mike and Dan show, where we talk about real estate investing, business, and HOAs apparently, which is the hot topic. We should talk about an update on this property though. So the quick, too long didn't read version. This is a condo that we flipped last year that we had sold.
We didn't flip.
Well, yeah. So that we were planning to flip it. We bought this thing, hoarder house, awesome renovation, place is great.
Beautiful.
Looked beautiful. Put it on the market. Had it sold. We had a $85,000 in net profit coming our way, and then 2 days before closing, the buyer's lender, who we also happen to know because it's small community, calls us and he's like, "Hey guys, we can't finance this property because the HOA that is in this condo situation, the insurance that they have is not adequate for our lender needs," right? And we're like, okay. And so I guess what was the basic situation was basically the insurance only had the replacement cost value, but the cost to replace the structure was less than the value of the property. So basically it did not cover the loan amount that the
lender would not approve it because if they're going to loan on it at say $300,000, the replacement cost of that was only like $200,000, and they're like, there's this gap here. And the reason why that was the case is because the HOA, there's a long-standing history here, but the short version of this, HOA had filed claims because there was 2 burst pipes in 2 different units, and because of that they're not able to get any better quality insurance, which is just bullshit. So we're having to sit on it for 2 years until we can get our insurance policy reviewed. So we're obviously renting it out, and it's not like a condo building like you think, like a 5-story building. It's like a duplex, right? So there's like 4 duplexes in this Glen Gill Court HOA, and literally nobody wants the insurance policy. Everybody wants their own insurance, but they're all kind of hosed and screwed right now.
Yeah, and it's such a dumb situation because, completely out of everybody's control. It was handled poorly kind of at the start, it sounds like. The HOA doesn't actually do anything because we bought this house as a hoarder house with so many issues wrong with it. And the lady that owned this condo, she lived across the street in a different freaking condo. So she could see this shenanigans going on for years before we bought it.
And go to the HOA meetings and not say anything. I was like, I didn't realize that was her, and I was like talking shit on the house and like how much money we were going to profit and all that sort of stuff at the first HOA meeting we went to.
Oh my God. Yeah. So, and even then, if it does come together, because right now, literally everyone's screwed. We're fortunate because we're investors that, do this kind of for a living. So we can park a tenant in there, have it as rental, whatever. But there are people in that community that have put their life savings into buying this house, this property, and can't sell it. Yeah. They're stuck there forever. Yeah. Unless they get this insurance situation.
It's an unfortunate situation. It's unfortunate because we had, 6 figures of cash coming back to us.
I know.
And, with the market, it's definitely not going to get the price we had originally because they went over ask. Yeah. So, we'll probably be getting a little less profit, but hopefully still getting some money back out of that thing.
We should. Our debt isn't too crazy because we had it sold at $340 or something crazy.
Yeah, something like that. Our list price was $315. It went over on an escalation, and my guess is we'll probably be able to sell it next year for $300,
$299. That's kind of what I was thinking too. Yeah. It's a nice property. It's not a large lot. If we went and cleaned up the landscaping a little bit, maybe a little bit more. But at the same time, it's also still like attached to another unit, so it's not quite as desirable. But, so we have our HOA meeting, so we should go see Gwen. I'm sure she's really excited to be taking her little break from the school district.
She is on vacation. Forgot about that.
Yeah, and just what did she try to penalize us for? Wasn't there something dumb that like our tenants did that she didn't like, and she tried to like charge us, and we were like, the house used to be a hoarder house.
Probably just deleted that email and just ignored it. I'm sure she did. Those tenants were, of course, replaced by our previous employee, and they were also kind of dummies, so I'm not surprised. Yeah, so
they were super trashy, but it still was better than the hoarder house that it was after.
Yes, so much better, dude.
So anyway.
Yeah.
You play this game long enough, weird things happen. But I will say that it was a big lesson for us. If you're ever doing anything with condos, because we checked the CCNRs and everything, and it was fine, but we never would have thought to check the insurance. And the thing is, we bought it with a loan.
Yeah, we did.
But our loan amount was less than the insurance that they provided. So they didn't care. It was the post-flipped value that caused this problem.
Small nuance that now we'll never make that mistake again, and hopefully our listeners won't have to make it because we made it for you.
Yeah. So I mean, for me, the big most was like, cool, I'm not gonna do condos anymore.
I know.
Just a lot of extra steps there, but it was just such an easy deal. It seemed like at the time, but anyways, so that's blast into the past for us. Either way, it's a little rental property that does okay. Kind of like, break even. We have some cheapish debt. We'll figure it out. Yeah. So, bigger picture though, there's finally started to be some talk about what the economy is doing again, which has been kind of interesting to sort of see that come together between, all of the extra senior citizens and lizard people that run the economy that seem to be just overwhelming the news right now. I don't know if you saw that thing where like Mitch McConnell just like stopped talking.
That was
and
so great.
His brain caught on fire. Like,
that was so great. I've been saying, and I'm not the only one, this is not original Dan Austin, but I've been saying for a while, like, we need to like have a cutoff on age for politicians. Because I was like, that like some of these people, like you think about your grandparents, you're like, I would never have my grandparents running this country. Like, they're past their prime. Nothing wrong with them. I mean, once you're in your 80s and 90s, you shouldn't be in office and power. Like, you're just past your prime. And then like most of our Congress and Senate, not most, but like a good portion of like the leaders are in that. Yeah.
I saw this like joke headline the other day. I reposted it, and it was like, family making tough decision about whether to put grandpa into hospice or nominate to run for Senate.
I saw that too. That's hilarious. You might have sent that to me. That's funny. Yeah, I like all the memes of like Mitch McConnell, and I'm not even like whatever the headline is, and then it's just him staring into the camera, like his picture floating around. You're like,
oh God. It's the worst.
Yeah, classic.
But between all that shit going on, people are starting to talk about some of the signs of the economy getting weird, tied to inflation, tied to reduced earnings, all sorts of things. But one of the things they've been talking about is, I guess, consumer spending is a big thing that they look at. So consumer debt rather versus their spending. So like how much credit card debt and things people are carrying from month to month. And this is actually an interesting statistic, and I'm wondering what sort of caused this. But they're saying that people right now that are not paying off their credit cards from month to month is currently up to like 66%, where it was only at like 32% a couple of years ago. So it's essentially doubled. And what exactly that means, people making less money.
I think that's the case.
I mean, I think it's
people
just
are more credit card debt.
Stuff's expensive right now, dude, and people aren't necessarily making more money. I mean, my wife and I, we went out to lunch, was it 2 weeks ago? Went and got like a sandwich, and it was like two sandwiches and a side was like $40.
You guys went to McDonald's and
got
a $40 McDouble?
No, I went to some local place here, but like the sandwiches base were like $17-18.
Yeah, no, it's so expensive. Do you think food's like the most expensive right now? Because I don't know. I don't buy a lot of other shit.
So for Washington State, it's increased a lot because we also changed the rules about tippable employees, where they now have to make minimum wage on top of making tips.
Well, that's been that way forever, though.
It's been that way for a couple of years, not that long, but that's finally
Idaho. That's different like that, though. Like Idaho, you still don't have to do that, I don't think.
No, you don't.
If they
Most
change
places
that
you
rule,
don't.
yeah.
So that's why it's so expensive in Washington, because, hey, this is how capitalism works, you guys. You change the rules, they pass this down to the consumer. Whoa,
Well,
crazy.
the other thing is, like, even the grocery store, it's expensive, and I'm
I know.
not tipping my bag boy, even though they want it.
We were on a little road trip and went to the gas station, and I bought like a energy drink at the gas station, and it wanted a tip on there. I was like, you didn't do anything.
Dude, I love that, bro. Like, seriously, like, you know what? If I knew you weren't making $20 an hour right now,
I know. But I mean,
I'm a generous tipper too, but the gas station's a little excessive.
Yeah, but I mean, I think that's a big thing. Is just stuff's just like expensive right now. Groceries are expensive. Gas is expensive most places. And people still like are trying to do stuff with their life. So just like general entertainment expenses and everything. And actually, I think the real problem is too many people are going to these damn Taylor Swift concerts and paying like $2,000 a ticket or whatever they're paying. That's really what most of the credit card debt
That is wild. The whole thing. I mean, I'll give it to you. It looks like it's probably a really good show. You're getting your entertainment.
3.5 hours.
I know. Of one person.
Of one person.
Yeah.
The set is like 47 songs.
Yeah, that's legit. She's awesome. And she does that like night after night. I don't know how many if she even takes days off. She's like a robot at this point.
I think that's the real story, is like good for her, because that is legitimately impressive. I mean, she's meant to make, I think, $500 million off of this tour. But like, I don't think that there's anything that I want to do for 3.5 hours, like, at all in the world.
No, I'm not going to concert for 3.5 hours. Yeah.
No way.
I'm not even going to the Barbie movie if it was 3.5 hours.
No. Well, I mean, definitely not going to that for 3.5 hours. You could go see it twice, and it would be the same amount of time.
Right.
But
so the consumer debt thing, though, I think what you're saying here is very valid. But do we really have to worry about that in the large economy?
Well, I guess
picture, how does that affect what we care about, which is real estate and being able to buy real estate?
For us, it doesn't. For the affluent, that's not really a big issue, right? Where the biggest thing is that
self-described.
I mean, it's the truth. Look it up. Sorry, Dan. You do pretty well for yourself.
Like, I'm affluent.
I mean, the barrier is shockingly low.
When you say that, I immediately think, I'm like, what is it, like the B or A? Influenza.
Influenza, yeah, right.
Which one are you?
So, but the biggest thing, the reason it's a talking point, is because that's been one of the biggest indicators of stuff getting a little bit weird in the economy over the past few years. Because consumer debt, because all of a sudden you have these credit card companies and things like that are, tied to banks, tied to financial institutions. If people start falling behind on that and defaulting on it, it's just like with mortgages, right? People default on those. The money has to come from somewhere, right? And they can take action. They can do these different things. And it can just lead to more problems down the line, and it puts more and more people into a bad financial situation, which is something that we're already dealing with kind of across most of the country anyway, where you're still seeing rents increase, but people aren't necessarily making more money. That's why you see so many of these situations right now of like people getting into these alternative living environments. I mean, we have how many different rental applicants have we had recently that are things like, oh, it's like 2 adult families that are not necessarily related that are living together.
Yeah.
It's because that's how they can afford to live in like a decent place.
Yeah, exactly.
Or like we're starting to see more and more of that, and eventually that's going to, well, first off, what it does is it kind of creates this self-fulfilling prophecy of like, well, they're going to pay more for rent, so rent's going to keep going up, and then it's going to keep being more and more of a problem. But eventually it's going to turn over somewhere. Like it has to. We can't just keep putting more and more people into smaller and smaller living situations and expect that to be fine. It's just not how it's going to work, because also the rents go up, the property values go up, taxes go up, rents go up again to cover the increased taxes. Eventually it's got to break somewhere.
What about all these rent by the room guys?
Well, that's what I'm saying. Are we going to be doing rent
that
by
was
the
a big
room in
thing in
Spokane?
that was a big thing in 2021, 2022. And is that like an early indicator that maybe a market's too hot and that things are going to have to pop because like people are only doing rent by the room because they can't afford in that location to rent a whole place, or don't have the sense that they need a whole place, and then they grow up and they say, I do need a backyard because I like my dog.
Well, that's the thing that is the talking point with that, right? Is so the rent by the room thing. I don't know if I heard about people doing that in, most cities. They're talking about that in like Seattle or San Francisco,
big
or
metros.
Austin, Texas, big metros where they're renting to, X employees or whatever the freaking top company
Forgot about
is
that.
now.
Yeah. X.
Yeah. They're renting to those employees who are like single people that just like want a freaking broom closet to live in. But when you start to get families, you're starting to look at school districts, people are gonna like be renting by the room to stay in a good school district. All of a sudden, it's like houses in Costa Rica, not Costa Rica, that's pretty nice, in some crappy country in Southeast Asia where they sleep with like 6 people in a 10 foot by 10 foot room. Is that what's going to get to in the U.S.? I hope not.
I think we still got a lot of room to grow. We're good.
We do?
Yeah, we got a lot of room to grow. We got a lot of urban sprawl capabilities.
For sure.
Right. When you're on an island or something, like you're compressing into a nation, and people are generally tribal, right? So they're staying within their nation walls.
Yeah.
So
but I mean this is the tricky thing though with just like the economics is we have a lot of room to grow, but with how expensive everything is, how expensive labor is, you can't build affordable housing. You can only build high-end housing.
Right.
Yeah.
Man.
Like
this is a tough conversation because I don't really know what the right answer is, and I'm a kind of a forever bull, and I'm not worried about it. But I think there could be some challenges ahead.
I mean, if you're on the right end of it, it's all good, but it kind of will eventually lead to the haves and the have-nots even more than there already is. I mean,
if affluent guys like yourself are able to tip when you buy a Rockstar, and you pay your taxes, then we can help give these people a hand up.
That's what we need is more handouts.
Genuine contribution is a main pillar in GoBundance, Mike. I want you to know that.
Hey, I like to give a good tip when there's good service. They got to earn it too. I'm not going to give them out handouts
because you're affluent.
Yeah. No, but I mean, like it is like a serious thing though. So even looking at the first house that I bought here in Spokane, it was back in 2017. That was a new build house, right? That I paid $200,000 for. Mm-hmm. You can't even build a house for $200,000 anymore. Especially when like that size.
Well, the materials are actually at the reasonable price that you could. The labor is not, and that's because people have all inflated. And it's hard to go. It's like they always say as like a business owner, like you can't give somebody a raise and take it back. So make sure they're deserving of it, and you're giving it to them for the right reasons. And I you think like, well, is the bubble going to pop or whatever? Really, what it comes down to is there's a shit ton of money pumped into the economy during COVID, right? Just a ton of money, more so than any other time in that short of a period. And so inflation rose everything. Will the prices drop? Probably not. Like they have to siphon. There's like, I guess, 2 ways to get out of this, but like the main one people talk about is like siphoning the money out of the system through quantitative tightening, which is a economic term that who cares what it means, but really what it comes down to is essentially sucking money out so that there's not that excess supply. But in reality, what is just enough time has to go by, and this is my opinion, for prices to stabilize and be reasonable again. So if a house costs now $300,000 to build, not $200,000, that just has to become the new price.
Yeah.
Absolutely. And wages, and the big thing is wages have to catch up. And I'm not going to lie, corporations, due to capitalism, are stingy bastards. They do not want to give you pay raises because their shareholders don't want to give you pay raises because their shareholders are affluent and they're assholes, and they are focused on one thing, and that's profits first, and that's how it works. That's capitalism. Sorry if you don't like it, but that's how the system works and why the system is so efficient. And so until companies get wages up, we're not going to be able to see that reset of price expectations.
Yeah, I mean, it's all super valid, right? And I think the plus side of the capitalism conversation is you can get yourself on the right side of it. It takes a lot of work, and it takes a lot of hustle, and you got to make a bunch of good decisions without straying from the path. But people can do it. People do it all the time. It's not even like rocket science, especially when you look at, with everything being expensive, just realize people will pay those expensive prices to you if you can offer the service, right?
For sure. And America's the best place to get on the right side of capitalism. Like we do allow that. Like there's not a lot of restrictions for the average person, and that's why you see so many people that go from like zero to hero in America. Those stories are true because of the reasons of the opportunities we have for that.
Exactly. Yeah. I mean, and the reason you read about it in like a newspaper and it's not a movie is because it's like that common, right? Now it's when someone's like from Bangladesh that's when they make the Hollywood movie, because he's the one in a billion.
Right.
You know?
Or like Slumdog Millionaire.
Exactly.
That was a good movie. I like that movie.
That was a good movie. But, you know, and I think, though, the big picture, one of the main points is if stuff does turn over, I don't think it's going to directly affect real estate, at least not in the immediate, because, you know, a lot of people have this like golden handcuff sort of effect with the real estate right now, especially those who kind of figured it out in like 2020, 2021, got into these stable living situations, and they're kind of seeing the turmoil. They have super low interest rates. People now have this belief that it will never get any better, so they're not going to go anywhere, at least not in like the now. Maybe in like a decade, when their house is starting to get worn down and they're like, damn, I got to put a roof on this now, and roofs now cost $85,000. Like, maybe I can't afford that.
Yeah. Here's so I think there's probably some benefit to that golden handcuff thing, and there's probably a lot more people that bought a duplex and are living in half of it than there were 4 years ago.
For sure.
Which is awesome for stabilizing the housing market, because people cannot be able to, they could lose their job and they can still have some level of income coming in for that house, as opposed to where it would have been just guys like you and me owning that and being like, hey, pay your rent please, or we're gonna have to kick you out. You know, so it's just a different situation. So there's I think that's a positive in some of the house hacking group.
Totally.
People have probably helped.
Well, that's a whole other conversation too, and that's something that I talked about on Friday Focus I did a couple weeks ago. But what I think is going to happen with the housing market is, on top of like all the actual, you know, economic factors that are slightly out of everyone's control, one of the biggest things that is in everyone's control is the number of people that have financial knowledge and have like financial drive to like do things with themselves is so much higher than it was 10 years ago.
Yeah, and there's so much more opportunity for a side hustle.
Yeah, or like to invest in real estate. You know, you have people that are going and making these decisions to like house hack their home, or or buy a duplex and live in one side, rent out the other, or do these live-in flips, or do these different things to get themselves to the next level. Whereas, like, you know, 10 years ago, 15 years ago, if you did that, you were kind of like the weirdo. Now that's like the cool thing to do. And so the volume of people that are trying to take advantage of those situations is becoming more and more abundant, right?
Maybe that's the solution to affordable housing, is capitalism is naturally fixing it. I mean, because you are creating these different housing opportunities, and people are taking a different approach to lowering their cost of housing.
Yeah.
But go ahead.
I mean, like I think the challenge with that is, you know, and this is like the red versus blue thing, is, you know, the red side of it says, yeah, you can figure it out. Here's kind of the way to do it. And the blue says, well, it's not their responsibility to have to figure it out. Right. It basically, you know, because it's based on like where they're from, like what their upbringing was. There's all these other factors that are against their control.
Privileged, not privileged.
Exactly.
Opportunity.
Right? So I don't know. Yeah. It's interesting. Either way, I just think if you have the ability to keep buying houses right now, you definitely should. And you should accumulate as many of them as you can if you want to be setting yourself up very well, because I don't think that the actual value of real estate is going to go anywhere soon.
Yeah, and don't be locked into this idea of golden handcuffs of your interest rate. Don't let your interest rate dictate financial decisions, because that doesn't really necessarily matter. Like, it's great. Like, I've got a 2.25% interest rate on my primary house. Does that mean I should keep it forever? Maybe, maybe not. Will I? I don't have any idea, but probably not.
Yeah.
Like any house I have, right? I refinanced out of 3% mortgages last year into 5% mortgages. That sucked from a cash flow perspective, but I was able to get my cash flow back, because as interest rates were rising, so was rents, and I was able to take money and repurpose it and replace it.
Yeah, and you're able to
way more cash flow.
Exactly. Use that equity to get net significantly higher than you lost.
Right.
And that's like the next level of thinking about when you start to learn about business and debt, is like the opportunity cost of all of the money and equity that you have in these properties. I mean, even, you know, if you have that 3% mortgage, if you had like a large down payment, if your equity is huge compared to your debt on the property, you can probably make a hell of a lot more than your difference would be if you go to go.
Absolutely. And if you kind of step back and observe it, like people generally get scared or nervous or say it's too risky when they see or feel money moving, right? Anytime money's transaction, they're like, oh, that's too much of a risk. So I think the opposite of that, like the counter to that is like having money or equity or whatever value sitting in an asset just getting stale, that's risky. And not paying attention to it and not treating it as a business. So when you buy a rental property, not treating that as a business. When you're flipping a house, not treating that as a business, like that's risky. And so like don't let your money get stale sitting there in one spot, and don't just move money around, but like move it when it makes the sense, when the numbers don't lie, right? Kind of like Shakira's hips, they do not lie.
Worst analogy ever.
Damn it, I've been waiting for that one for months.
Yeah, I mean, you know, you're
but
right.
They don't lie.
They don't lie. Yeah, and that's why it's so important as well to be active with your finances, where I think a lot of people just aren't, especially if you're in a W-2. Most people, they live month by month. The money comes in, it goes out. You're over here cracking up by your stupid jokes.
I'm laughing about myself. I don't come out. I don't do that very often.
Just so proud of yourself. But didn't she go to jail? Or she's in prison right now?
Shakira?
Yeah, I'm pretty sure she went to prison for tax evasion.
Oh no, really?
Yeah, this was a few months ago. This is old news at this point.
Damn it.
See, did she stand trial? Second tax fraud. 8 years in prison. I don't see her getting charged yet, though. I don't know. Anyway, it's a
that
tangent.
sucks.
But yeah, sorry, Dan. You'll never get a.
Those hips do lie.
The hips do lie to the tax man.
Yes, exactly.
Anyhow, but
back on track.
Back on track. I don't even remember where we were anymore.
Yeah.
So, no, I think that it's just the active role with your finances is so important if you want to, do something with yourself. So many people focus on trying to. I don't know why you're still over there. If you're trying to like just get out of like the month-to-month income and expense mindset, and a lot of people don't want to do that because they're just always trying to get like the next raise or whatever. But there's so many ways that you can escalate your financial position and your earnings without, just by diving in a little bit deeper. But so
W-2 pay raises.
Are you still back. Good? You're still over
I'm back. We're talking about W-2 pay raises that suck.
No, I guess. I don't know. I was going to move on to what our business is doing.
Okay. Yeah, what is our business doing?
So, we've just wrapped up the month of July, and we got, 16 new contracts. We had
700 something leads, you said?
700 leads. We had an insane number of leads across all of our markets with all of our partners. We had a handful of we had 8 closings. We had several closings get pushed into this month. We currently have 16 in escrow. It's funny. There's been this huge influx in properties that are like underwater, like not literally, but like we had one that was literally underwater that we talked to, poor lady. Nice. I felt bad for her. But the other ones that are, their offer price that we can offer is quite a bit less than their debt. And almost all of them are situations where people bought with like FHA loans over the last several years, and the property's in really poor condition, and it got approved for the FHA loan because the buyer went and painted the paint chips on the outside or whatever bullshit thing that's the only thing they apparently care about.
Of course.
With FHA loans.
Been there, done that.
We're running into this like a ton all of a sudden. Like I feel like we didn't see that for years just because the market was so hot. And I want to say we've had that conversation a dozen times in the last month with different leads.
Yeah. It's gonna maybe a telltale sign.
I mean, it's just super interesting, and I think it just goes back as well to like the faulty lending practices that they were doing. Of like, oh, really? So maybe you shouldn't have been giving people 3% down mortgages if they didn't actually have any money.
That's the big problem. Is like the bank doesn't give a shit about the condition of the house. The only thing that they care about is reserves to pay their mortgage. But in reality, like you should be like, we'll give you a 0% down loan, but you have to have 5% of the property in an account for maintenance, because a lot of those first-time home buyer houses, I mean, I was listing some of them, they were not in great condition, and people could barely they could barely afford them, and the house needed a new roof, and all that stuff was quite apparent. It wasn't like we were hiding it or the sellers were hiding it. It was that was the only available inventory, and people were capitalizing on that because that's like a once in a lifetime opportunity where you were able to take your house to the full depreciation level, not do shit to it, and sell it for a pile of cash.
I know.
That doesn't happen normally.
No, it really doesn't.
And a bunch of young couples with little babies have houses with leaky roofs now.
Right, and that's it. I know. Well, it's such a weird sort of situation too, but because like we sold several flips like that to those sort of people, and they would pay way too high prices for things, like all the time, left and right, and the house would be an absolute disaster. But right before closing, they would come, they'd do their inspection, they'd be like, "We noticed that at the very top of the roof, the paint is peeling, so you guys got to go up there and fix that." I'm like, "Okay, we'll go do that," and they'd be like, "You're just gonna ignore the fact that the plumbing doesn't work right, whatever."
Right. Yeah.
You know, and but now all those people, they can't afford to maintain these fixer-uppers that they bought, and that's 2 years later that's coming to bite people. But I mean, we had one that we sold? Didn't we have to give them like a $70 credit? Otherwise, they weren't going to be able to get approved for their loan.
It was some stupid stuff like that. Like, we've had enough of those situations. We're like, come on, man.
Well, it was an insanely small amount of money, and I was like, if you're even getting that close, they shouldn't be getting the loan anyway.
Right, for
sure.
sure.
But because you know what costs $70 in a house? Like nothing. Like everything costs at least
bill maybe
at least 10x that, if not more.
Yeah, hot water tank. Jesus, those are expensive now.
No,
we used to pay like $1,000, $1,200 to have those replaced. The last one we had to replace was like $2,000.
Really?
Like, gosh dang, yeah. Not the hot water tank's the same. The labor just jumps up.
Yeah, well, Vitaly can't hook us up like he used to. You can't bring the old Russian guy that tried to sell me a gun when I went to
forgot about that. Yeah, we have some good local HVAC people around here.
Yeah, that's funny, man. So I don't know, whatever the situation will be with that stuff, it'll be interesting. But
yeah,
all in all, though, I mean, it was a good general month for our business. You know, we've been working on getting the sales guys kind of like buttoned up. We brought on some new people into our partnership program, launching in a couple markets down in Florida as well as a market in South Carolina. We've had several people join our 7-figure investor mentorship program.
Shit's blowing up.
We just got a lot of stuff moving right now, man. It's been fun to see.
Yeah. What are you most excited about? What's the most exciting one?
I don't want to talk about the potential most excited one yet because nothing's come from it yet, and I don't want to jinx it.
You're talking about the thing that we talked about a couple weeks ago?
Did we talk about it on here? I don't think we did.
Not on the show. No, of course not.
Yeah.
Okay.
Yeah. I mean, we know maybe something coming soon. If it doesn't come together, we'll still talk about it. But until I hear what's coming next. But
yeah, I'm not going to say shit.
Yeah, I'm not going to say anything.
I'm not jinxing it.
Yeah, but outside of that, I'm super excited with how some of our partners have been coming together with their markets. We have several markets that have almost turned on to like what it feels like autopilot mode, where they're just like super good, vibing between our acquisition manager and our sales team and what they're doing, and it just has been churning opportunities, which has been really fun to watch. And then also too, I guess one of the other things I'm really excited about is in our 7-figure investor mastermind group, our group coaching program, we have people that like are making legitimate money. The point that we had one guy, Dylan Cook, who just made his first $100,000 month, which is insane, right?
That is crazy.
You know, and that's like net profit, the bottom of all his expenses and everything. Like that's awesome. We have several people that are making, have made their salaries from previous years in like a couple of weeks, and it's just super exciting to watch those people start to come together.
They're crushing it. Yeah, I'm looking at Dylan's deals right now. That is breakdown in like SMS leads, direct mail leads, both which we heavily preach, and just crushing it. You got little 5K bumps here, and then $60,000 profit here, $30,000 profit here. It's like it all adds up, and like that's what we try to tell our partners too. Like a little 5K bump, it is worth your time because you got to do a few base hits, and then you're gonna get double, then you get a home run, then you get a grand slam. It's so additive in this business. Don't think that just because you only can make 10 grand on an average on a deal doesn't mean you're gonna pop out $60,000 profit here and there.
Yeah,
because you do.
I mean, it's all about just getting the systems, the consistency going. And, since that's what we focus on is like, how do you build this as a repeatable system and not as something that's going to, make you be like a slave to it, or you get like kind of lucky one time. It's just so cool to watch people get to that point where they're like, kind of like doing the thing. And I'm not just doing it once, but I'm doing it over and over and over again. And that's where like lives start to get changed. So that's been super cool.
That has been fun.
Yeah. So anyways, anything else?
No.
Grinding through the rest of the summer, so keep it rolling. So, right on, guys. Well, hopefully you enjoyed our ramblings of the week. If you did, you should share this with people. It's the easiest way for us to grow the show is for you to tell your friends, anyone that you know that's into real estate or investing, or just wants to know like how to make money, even if they like don't really want to do real estate or invest or do business, but they just want to, do the mental masturbation, as Alex Ramosi always says, of listening to people talk about making money, you should introduce them to the show.
Dude,
You
yeah.
might enjoy it.
Mike's affluent. He can talk about money all day long.
Damn it.
Now I can let that one go.
I know. I apparently buried myself with that. So, anyways, guys, go ahead and share with people. That's a great way to help us continue to grow. You should also follow us on Instagram. I'm at Mike_invests. Dan is at InvestorMan. Dan, shoot us a DM. Let us know what you think. Let us know what you're doing for investments, and we would love to hear from you. Believe it or not, we do this because we want people to reach out to us, not just because we kind of, feel like it, want to be behind a mirror or whatever.
Yes, reach out.
So reach out. Let us know what's going on. And I appreciate you guys. So thanks for listening. We'll talk to y'all next week.
See y'all.